Play the recording too.
That'd be good.
Okay.
Okay, we are live. We are live.
Okay, we're live. We're live. We're live. Hello, everybody in social media land. I'm Realtor Veronica Hinton at Properties, Loretta Thomas Group.
Do
I
you hear that? I'm sorry, Veronica. Do you hear that little background noise? The echo? Is it
uh-uh.
just me?
You hear echo?
Do you hear anything, Joy?
Do you hear one, Joy?
Okay,
Nope.
maybe that's me. Let me go on mute. I'm
I
sorry.
I hear a little beeping, like somebody's smoke alarm needs a new battery.
Okay, maybe that's what it is then. Because I'm like, I heard something.
A
Okay, I'm at
complaint
the
or
office,
something.
so we don't have nothing up in here.
So it's
Okay,
got to be you, Veronica, because I'm at the office too.
yeah, one of y'all need to change y'all smoke. No, it's not my fault. I'm good. Okay, it's not me.
Veronica, look.
I'm the one at home.
Look, Joy and I still over here burning the
We
midnight
at the
oil now.
office. So
I do hear it, but I swear it is not me. I'm not that guy.
okay.
That's so silly. Okay. Okay. I heard it. Okay, so what I was saying was I am Veronica Hinton, realtor with App Properties, Liberty Thomas Group. And we decided to go live and just discuss a couple things that we run into that Joy and our loan officer, Joy and I run into often with our self-employed buyers. Um, it is in regards to your deductions and how you guys disqualify yourselves from buying a home. So once again, I am Veronica Hinton, realtor, licensed in Northwest Indiana and in Illinois. And we also have who do we have here with us today?
So my name is Joyce Senegar Munoz. Oh, I'm sorry. Go ahead.
Go ahead,
I'm
Joy.
sorry
Go
for.
ahead, Joy.
So I'm a lender. I'm licensed in a few states, and I'm so happy to be here with the GOAT tax queen,
Man,
Patrice.
You are too kind, Miss Joy. Too kind. Look. And I am Patrice L. Stewart, better known as the realist tax and business strategist. And I got that trademark, okay? Don't be using my slogan out there, y'all. So I'm excited to be here with both of these ladies as well. I have worked with both Veronica and Joy and Veronica. I was so excited when we got together to do this. So let's roll. Let's get the people some information that they can take.
let's go. I'm gonna start
Let's
off with
do
a
it.
scenario that I see way too often. Person comes to me, they've been following me on social media for a year. They're very excited about buying a house. They have saved some money. They got their credit score where they think it needs to be. And we're all excited and they say, hey, I want to do an application. They do the online application. And because they're self-employed, I do believe all underwriters. Joyce, tell me, am I wrong or right? Do all underwriters require tax returns for self-employed people, or is it just some lenders? Or I'm thinking it's all because I've always
It
encountered.
depends. Yeah, it depends on the product. If it's a traditional product, yeah, you would need taxes. If it's a 1099 loan, then no, we wouldn't need to see their file returns. But majority of folks that go through the traditional process, if you're self-employed, we got to see at least 1 year of tax
Okay.
returns.
And this has been with every, not just guarantee rate. This has been with every lender I've ever worked with. When they're self-employed, they are required to show a tax return, right? And so these buyers, they have legitimate businesses. They are self-employed. They have restaurants. They're photographers. They are personal trainers. They have a numerous. There are stylists, nail techs, massage therapists, whatever you can think of. Own trucking companies. They have a great income, but when it comes down to their tax returns, and it's time to go ahead and put that forward to upload it. They may have made $100,000 or $150,000, but their tax return reflects them not making very much. Making their tax return shows them netting $40,000 for the year, right? And that's not enough money to get the homes that they want to get. They basically no longer qualify based on their tax returns. So one day I had a borrower who had their taxes done by a professional. And what this professional did was this this particular buyer was a hairstylist. She has her own shop. When she opened up the shop, she spent tens of thousands of dollars uh, buying equipment, dryers, washers, getting all these things done. And these things were, her tax person was able to consider that a depreciating asset. So that did not wipe away all of her income. Her income wasn't all dissolved into advertising, contract labor, and whatever else the tax people they just fill stuff in. And I know, unfortunately, with a lot of buyers, they give us their taxes. They don't even know what's on them. They have no idea what these expenses are. They just got their taxes done. So I kind of want to. It's not quite. Well, it's tax season, but it's very early in tax season. So I want to just kind of catch the self-employed people who want to buy a home early and say, there's another way. If you're a photographer, you spend $20,000 on video equipment and all these other different things that you can do. I want Patrice to kind of explain to us, give us a little more detail about what a depreciating asset is.
So a depreciating asset in the eyes of the IRS, pretty much it can be like what you stated, equipment, right? Vehicles, also property, right? Real estate. This is what we're talking about. So that's a great way to lower a lot of clients' income, not necessarily income, but a great deduction, right? That gives them is that depreciation, right? So with, like you said, some businesses, if they have purchased equipment, if they have property or assets that we can use, that we can actually depreciate. And the good thing with that I like about real estate too is you can depreciate that building for 27 and a half years.
Okay.
Okay. So you have with on average with vehicles, you can depreciate it about 5 years, right? But that's another reason why people like real estate, especially people who start making some money, and a lot of people pour that money back into buying some type of real estate, is because of the type of deductions that you get, right? So depreciation is just one part with real estate. If they own property, they own buildings, they also can have other deductions that we file normally on a Schedule E form. So if you have rental property, you're claiming rental income, you also have rental expenses. But I know that's another thing, along with depreciation. So yes, and then I know Joy can kind of piggyback off of this, that when we are working with clients, that's why it's important to work with a tax professional who really knows what they're doing, because these are questions that we should actually be asking you. I ask all of my clients every year when they come, are you planning to purchase a home this year or next year? Right?
Mm-hmm.
Because the other thing is, and I want Joy to piggyback off of this, and then I'll stop and then we can come back to it. But the other thing is a lot of people are not working with the proper people, right? It's a big difference from working with an expert, and it's a difference from working with a side hustler that's just doing taxes to make some money. And that's really what we see, right? A lot of exactly self-prepared. Now we talked about that, right? If your paperwork say self-prepared, but you pay somebody, baby, that's another conversation for another day. But I want Joy to piggyback off of the depreciation, because with Joy being in lending, and this is how I learned from one of my loan officers, that like 10 years ago, right? She helped me with that, with telling me that in lending, if we do have a client that is able to depreciate, Joy, how does that work on the lending side, where that may actually be able to help a client versus hinder a client?
That's an amazing question. I love depreciation. I love mileage and I love depreciation because I can add depreciation back dollar for dollar. So we did have someone who wrote off, I want to say $100,000 in depreciation because she was opening up a salon and had the equipment, and a lot goes into that, you know. So she's going to have depreciation for several years until she gets on her feet. We were able to add back all that depreciation, and she got her home and she had no tax liability. So it was the best of both worlds. Now, if she went to a tax preparer or a tax professional, they probably would have written it off in advertising, which I cannot add back. They would have said contract labor. Yeah, contract labor, that's like that goes buckets, is taking the money and putting it in the trash. I can't add it back. as a lender. Now, it may lessen your liability from the tax standpoint, but it will
Uh-oh.
Oh, we lost you, Joy.
Uh-oh. That's that Android.
That's the end of it. Don't be talking about. Oh,
But
she has.
we may
She.
have temporarily lost her, but I mean, I work hand in hand with her. Uh, so basically,
oh
what
my
I
God.
There
there
she
you
is.
go.
Okay.
Are
Am
you
You
I
back.
back?
You
here?
back.
Lord, I'm sorry. And I
You
was
back.
talking mess about your fire detector, and I'm having issues with internet, so my bad. So
Guys.
I'm sorry. And I was talking so good. So
You
all
was. Come
right. So
on,
yeah,
Joy.
I know. So throwing anything into those other buckets other than depreciation and mileage, I can do nothing with. So just be careful. And that's why it's important, like Patrice said, that your tax person asks, hey, are you planning to apply for any loans, home equities, whatever? Because once you file it, well, if you have to amend it, we put different requirements in place to even use an amended tax return. So it's just important to deal with someone who has the experience like Patrice. She's been doing it a very long time. She doesn't, like you said, just try to get you the most return, not even caring what happens to you next year. That'll make our lives easier, and then you'll be able to get to the finish line and get your fees if you work with someone like Patrice.
Yep. I'll give you guys an example of one that Joy and I had. We had somebody that had a daycare. And in that daycare, she provides a transportation service. She bought two
Mhm.
vans, right? And her tax person was, as opposed to saying she spent $40,000 on vehicles and taking $40,000 of her profits and removing it, saying, hey, IRS, I spent that money. I didn't make it. Her tax person was able to depreciate those two vehicles. So that
Yep.
it was the same amount, but because it was depreciated and not money spent, but money lost in depreciation of the value,
Right.
that's not a tangible loss. Dre was able to add that 40,000. I'm just throwing 40,000. I don't remember what her taxes look like.
Yeah.
Dre was able to add that $40,000 back to her income. So for the IRS, the deduction was fair and legal and authorized, but for lending purposes, Joy was able to add it back. So she
Hmm.
qualified for I think almost $500,000 worth of
She
house.
did.
Whereas,
She did.
right, whereas had she done her taxes, had she just said, "Hey, I spent $40,000 on two different cars." Now that's money spent. It's how you do it. We're not
Correct.
saying that you cannot deduct these things that are expenses, but they just have to be done in a different way that involves a little more skill. Your average tax lady is not going to know how to do this. They're not going to know how to calculate. They're not going to know how to do these things. So it's important that you get ahead of it.
Yeah.
Don't pay somebody to make it to where you have to wait another year to buy a house because you got to pay somebody else to get taxes
Yeah.
again, right?
Yeah.
And there's one thing that I wanted to talk about. I did not get into. Joy touched on mileage. Um, Mileage can be added back, not dollar for dollar, but is it 26
It's
cents on the dollar?
26 cents. Yep, 26 cents per mile. So usually anything with mileage, and I'm just speaking from, full transparency, as a lender, we know we're not tax professionals, right?
Hmm.
So we're not going to analyze how you came to the depreciation. We're not going to analyze how you came to the mileage. What we
Right.
will analyze is if you took a significant loss, in advertising. And then if you file again, let's say you file in 2023 and your income was only $12,000, your AGI, after you took everything out. That means that the following year, you're going to have to file more because we're going to average the 2 years because there was a loss the year prior. So
Hmm.
that's why it's important as soon as you get, into your business and you know you're going to be self-employed, get with someone who knows your 2-year plan. You might be wanting to purchase next year, but let's say you're 2 years out. Have someone like Patrice file both years because as a lender, we're probably going to be looking at both years.
Right.
So
Every years. Right.
yeah, So
Yeah.
that's important. So don't take all the losses one year and think you're going to fix it on the next return, because we're going to look at both years.
Yep.
Right.
Yep.
Quick question, Joy. So you're saying,
Mhm,
because I don't think I remember that. So
mhm,
you're so out of the so like last year, mileage for 2024 was 67 cents a mile. This
mhm,
year for 2025 tax period, it will be 70 cents a mile. So you're saying
mhm.
if they're claiming their mileage and they're getting the 70-cent write-off, you all will allow 26 cents
Back. Yep.
back to the back end of their loan.
Correct. So
I
we'll
didn't
add
know
back
that.
their mileage at 26. I know it's not fair, right? We should be doing it at 76 cents
Yeah, but
because,
I mean, you're giving them Linden is giving them something.
Give
I
it.
don't.
yeah. So
So
we're giving them less.
does that basically mean that if I have $10,000 worth of mileage, that the lender can put back 2,600 when it comes time to apply for a home loan? Is
Yeah, if you
that
got
what that means?
10,000 miles, yes.
Yeah, and that's a lot of miles. I'm just trying to put things into the terms that people can understand. So if I have
Hmm.
a $10,000 loss in mileage, my lender can add back 2,600 of that back to my income to qualify me for more home. So
Well,
mileage can be added
because
back.
yours is 72, would you say 76 cents per mile?
Yeah, this year it'll be 70 cents per mile that they get. So on the
Okay.
tax for this year,
I don't
last
have
year
a
it was
calculator.
67. So I just did it, Joy.
Okay.
10,026 cents. It would be $2,600.
Okay. Yeah. So then that's what it would be. Yep.
Okay, okay, yeah. So that's some of the ways too. If you have a job where you're driving, I mean, first of all, if you're self-employed and you're doing tasks that pertain to your self-employment, that's mileage. Keep track of your mileage. Patrice, do you know of any? I always hear about different apps and things that help you track mileage. You may know because it says tax and business strategist. Are you familiar with any apps or things that can help self-employed people keep track of their miles versus their regular miles?
Yeah,
That could be a time.
so the app that I like is my mileage IQ. I can type it in the comments.
Okay.
Mileage IQ, what I like about them is it's literally like you opening the app, but it looked like Google Maps and it just tracks you. So once you're leaving your home or leaving your office, you're gonna cut it on and it's gonna follow you around the whole day with your destination. And then at the end of the year, it literally prints a report out. So that way it tracks every mileage that you did. It actually it's not necessarily recording it, but it is, right? It's tracking where you're going throughout your day. And then when you're done, you'll just hit the end button on the app and now it's, calculated everything for you. But one thing I do want to say, because a lot of entrepreneurs don't really keep up with their mileage, and that's really one of the easiest ways for the IRS to audit your Schedule C, right?
Uh-huh.
Ask if you ever get audited and they ask you, they want that mileage report, and people are like, what do I do? So back in the day, we used to have a notebook in your car,
Okay.
right? And I used to tell people, write it down,
Mm-hmm.
right? But have some type of record or documentation showing where you're going. And a lot of people just think like, oh, they never asked me for it. But
It be that time when they
it,
ask you for it that you
Yeah.
need it.
and
Okay.
honestly, I'm gonna tell y'all, this has been the longest time. This has been the most audits that I have seen or had people reach out to me in these last 3 to 4 years since that whole PPP fiasco. And
Mm-hmm.
that's really what's happening, right? And so that's another reason why I'm glad we're getting on here at the beginning of the year to really talk to these people, because you have so many new preparers out here promoting all of these different things. It's a lot of schemers and scammers out here as well.
Arms folded tight.
Yeah.
Man, look, everybody got. So I'm like, I'm like, y'all need to pay attention because it it's taxes are serious. I just want to say that this is not something like I take my business serious. I'm all year round. I'm not January through April. I'm in this office January through December, right? And I do that, April. And I did that because I wanted to take this serious, right? Taxes
Mm-hmm.
is very detailed.
Mm-hmm.
Laws change every single year. Okay. Every state has different laws. So you have federal tax laws and then you have state tax laws. So this isn't something that you just jump on TurboTax and start finagling numbers and playing with people's lives. right? Because this is
Right.
been in this industry for the last 20 years. I'm 20 years now.
Joy
That's
has
what I've
too.
seen. You know what I mean? I'm like, I've seen it go from people understanding real professionals to people like literally trying to argue back and forth with me, which I don't argue with nobody on this internet no more. I learned that, right?
Mhm.
Like, baby, you know your stuff. You don't have time to be arguing with nobody crackhead on here. So,
Yeah.
but but I'm like, I need you all to understand that, because just because somebody's posting that they can get you back 12,000, the problem with so many people in our communities who look like us, right, is a lot of people are financially illiterate. And you
Mhm.
get paid the most when you are financially illiterate, when you are okay with just getting the biggest refund and not asking questions. That's another thing with me. I don't have one client that can come in here and tell you that I filed their taxes and they don't know what's on their taxes.
That
I'm going
happens
over,
quite often when we get
yeah,
right
That
Joy.
happens a lot.
that makes no sense to
They
me.
don't even know that they had a business.
That
Yeah.
Sometimes it's like a business. Like, yeah, how did you these your taxes, right?
And this is what I'm talking about. Because when people are saying, oh, I want this refund, they're not telling you how they got to this refund. They're not telling you that they're adding a bogus fake business that you really don't own. They're not telling you that they put fuel tax credit on there. When people was talking about that 20 and 30K these last 2 years, I was like, y'all are slow. Like slow to the slow. If I'm telling you that you only qualify for 3,000 and then you call me and say, well, so and so said I could get 20,000, baby, please go to them, because all of those same people are calling me now. Patrice, can you please help me? I'm stuck. I'm getting audited. I got this fuel tax credit on here. They said I was a pilot and I had a plane. Yeah. Yeah, they did say you had a pilot, because fuel tax credit is not for you truckers. I know
Is that how
truckers.
that happened? I don't know if that's I don't
Wow.
I'm dealing in scandalousness. So is that what that was for? 'Cause I heard about the fuel tax
Yes,
credit. That's
girl.
for
Yes. Anybody telling you I can get you that 20 to 30K, they were putting fuel tax credit on people and lying and saying these people own aircrafts and that they were pilots. I have the tax returns. I got a couple of them right here. I done had people dropping off paperwork documents forever, because, and then I say, print the paperwork out. Let me see it. And I can go straight through the tax return and see on this line item, it's inflated, right? And so then when I open up that screen, there it is, fuel tax credit. Or they were, for business owners, they were telling them, oh, you can get this ERC credit, which was the employee retention credit. Now,
Okay.
most most people, right? Most small business owners, not all, but a lot. Let's not say most. Some small business owners, you're the only employee. You have not even paid yourself a W-2. So people were telling them, "Oh, you qualify for this." No, you don't. Because if you did not run payroll, and when I say payroll, I mean a W-2, not a 1099 where you're paying somebody a flat 5,000 and you're not taxing them. That's a
Mhm.
1099 person. A W, y'all know what a W-2 is.
Yeah.
People need to stop acting slow, right? So I'm like, hello, like, when have you ever ran payroll? When have you ever paid yourself as a W-2 employee? You know what I'm saying? But I'm not going back and forth with you if you okay with listening to the scammer. And that's the problem with too many people in our community. And then when you all get the tax return and they want to go and buy a $300,000 or $400,000 house with you, Veronica, you like, baby, you made $20,000. When
Yeah.
you send the paperwork to Joy like, she made 200,000, but it says that her net was 20,000. How
and
are
that's
you gonna get a
exactly
house?
what we see. And it's
We
not
see
fair
it
because
often.
don't we? And that's not fair because they really did make 200,000.
Thousand.
They really did. They
Yeah.
really did. Um, but what we want to focus on is just kind of give it. It's just saying, hey, professionals,
Yep.
you are a professional at what you do. So treat yourself and take your taxes to another professional, not your near and dear friend who has some tax knowledge. If, they maybe can do basic returns. If somebody just has a W-2 and two kids and they don't want to do it themselves, that's one thing. But by the time you have a legitimate business, you need to take your taxes to someone that can appropriately do them and has more than your basic tax knowledge, because self-employed people need people who have more than basic tax knowledge. So now my self-employed people, you haven't filed yet. If you follow me, if you follow Joy,
Mm-hmm.
if you follow Patrice, and you haven't already hired her, now's the time to go ahead and lock in some dates with her if you plan on buying a house, or if you don't plan on buying a house, just want your taxes done right.
Just talk to her. Yeah,
You
and
know?
another thing I want to add too is for people who recently purchased, I think you should talk to Patrice as well because you miss out on a lot of deductions and tax exemptions that you wouldn't normally get as someone who doesn't own, or if you have a multi-unit, how to claim that on the taxes. Like we've had people who own property that don't file, like own investment property, don't file a Schedule E. So it's like, what's the
They're
what's the
scared to
the
claim the
purpose?
income, Joy. They're
Yeah.
when I talk to them, they're scared to claim the income. But
Mm,
I have to also let them know you're claiming the income, but baby, you have 14 to 15 items of deductions, right?
yep.
You can write off that mortgage interest. One of my
Yes.
clients paid $18,000
Wow.
mortgage interest for her building. But you know what? That was a full write-off and deduction for her on that Schedule E. She
Mm-hmm.
paid a property management company. That was $800. That was a deduction, right?
Mm-hmm.
If she had to fix the heater or hot water tank or something. Any repairs, contract maintenance, that's a deduction. So
Yep.
even though she made $25,000 after depreciation and deduction, she had like 58,000 in deductions.
And deductions, yeah. And I can add that back too. That's so like if you have someone who wants to refi a building and they're afraid that claiming that will get in the way of them qualifying for something, I can add back that same depreciation that you write off on the property. I can also add back any one-time expense. So let's say they did a full overhaul. It was a property that needed a lot of work. And, you know, after they did the work, it was a one-time write-off. I can add that back as well.
Okay. Okay. So right. So
I didn't know
that
that.
is
That's
also
good
an
to know
option.
too.
Yep.
I didn't know. That's good to know. Thanks.
Yep.
That is good to know. That's why I said I'm glad I got on this live because I don't think I've worked with you, Joy, yet with these
I
ladies.
know, but I'm learning a lot from you because there's
Let's
a
do
few
this.
things that, I'm looking at some of these tax returns and I'm going to start telling folks like, hey, look, next year, I need you to talk to Patrice because whoever did your taxes previously, even if you weren't purchasing a home, you're setting yourself up to be audited. So,
Yes.
Yeah.
Yep.
And
Yep.
that's what they don't get, right? Like even because with businesses, what you all have to, like you said, even if you're not ready to do a home, but
yep.
the other lie that's out here on the internet from the schemers and the scammers and the fake influencers is you can go to these banks and get a loan with no money. With your business being brand new and you didn't make any money. That's a lie.
Yep.
Like
Say
if
lie. You call it a lie. It's not a myth.
it's not a myth, it's a lie. Like Joy's in lending and mortgage, but I'm sure if she referred you to her business loan officer, they're not going to look at your tax return showing a negative 20,000 and be like, yeah, here go 50 bands.
Yeah, there you
Like
go. There you go.
make
Or
make
that,
it make sense.
or there actually may have been some places that were lenient, but this information gets shared so much, and people
Yeah.
who are not business savvy go walk right in there and take advantage, and then these institutions end up losing. So then they cut those different programs and things. It just takes a few people to ruin it for everybody. So
Yeah.
if that was a thing, it's not anymore because with this information that we share so abundantly, people
Yeah.
are taking
Yeah,
advantage.
but that part there, Veronica, was never real, right? I mean,
Oh, that was never a
even
Right.
thing.
no,
Okay.
that was never that's just like you, right? If no bank is giving you money with a negative the thing, right? So
Right.
most banks will give you up to 50,000 as a small business, right? Which
Okay.
you can go to today. Their BMO is one of my main partners that I send clients to get some money, right? And
Okay.
so they're going to ask for, have you been in business 2 years? They want your articles of incorporation, articles of organization. And then when you sit down with the banker is going to say, on average, what is your annual sales? Now and those are considered no doc loans up to 50K, no doc loans, right? But the bank could still come back and ask for a tax return. The bank could come back and ask for a profit and loss report. It just depends on the lender, the loan officer, right? The underwriter who picks it up, and then the bank. Because I have had a couple of clients that BMO did come back and say, hey, can we see your last year's tax return? Can we see a profit and loss report or something like that, right? But what I was saying was, even if you can be a newer company or a business, you still have to say you had some income. You're not telling that
Yeah.
banker I made zero and they're going to give you a loan. No one is going to do that. And
Okay.
that's the lies and the myth that's being told. Like, oh, I went and opened up my brand new LLC and got this 50,000. No, you didn't.
Okay.
No.
I see
You
what
didn't.
you're saying now.
You get
Okay.
what I'm saying? Yeah.
Yeah. Yeah.
So they still need the taxes prepared right, like you said, even for that.
Yeah.
If you're a business and you're trying to get lending, you're trying to get a home, you're trying to go buy a car, anything, you still have to show some form of income. So I'm gonna say this, and then I'll give it back to you, Veronica. The thing too is with I just lost my whole train of thought.
That's okay. Look, I was
Because it's
taking
so
notes
much
too.
space. This is such a layered subject, you
It
know.
It is
is.
so much. I swear, I just lost my whole train of thought and what I wanted to say on here.
I know. I know where you were going with it.
Okay, what was I going with, Joy?
You were saying about how you have to structure it, like depending on what the path is. You can't just start the business today and say, "Oh yeah, give me this money," but you got a $20,000 loss. You have to show. Sometimes you got to show some, which means you got to pay. You might have to pay the IRS, but you got to show some to get in the door, to get the things you need. And then if you're not buying nothing, then go back and say, "Hey, write it all off," because I'm sure you have a fix for that too. But if we're talking long-term goals and you're trying to acquire things, if you go up to a family member and say, "Hey, look, I know I don't have any money. I know if you look at my account, it's negative, but can I borrow $300,000?" They're going to tell you
I
no.
give you right
So, you know, so you have to look good on paper. We know you made more. Every time I see a return, I'm like, I know they're making more money than this.
Right.
But look good on paper enough to get you in the door legally, and
Right, legally. That's
understand,
important. Yeah.
don't give Patrice issues if you got to pay the IRS, because that's part of it. Like, she's going to have to put some income on paper. And when she says, "Hey, you better send this first payment in," and if you don't do it, that could stop you from getting a home too. So I know when you give them their returns, Patrice, you tell them, "Hey, you got to send this to the IRS. This is the amount you got to send in. Here's the slip." And they just forget about that. They just file it away. And then
Yeah.
they're calling you when the IRS is coming after them. So just be prepared, follow whatever you tell them to do, and pay. If you owe the IRS, pay. We get you in the house. You can come back next year and do something different.
Yes,
Yeah. Can
and
I?
that is where I was going with it. Which in
Mhm.
a nutshell is every year is different, you all, right? And so we there, believe me, I even though I work with the IRS, I'm with my clients on saving the most money legally, right? And what's
Yeah.
in the tax laws. The beautiful thing with business taxes is we have wonderful business tax laws. Now, when I say business, I'm at this point, I'm talking about corporation and S corp, because Schedule C, you all have to start where you have to start, right? Every business, like Joy says, has to grow until you can get to that next point and level, right? But if any of
Mhm.
you all are making $100,000 in your business and you're a LLC, a single member LLC, just a basic LLC, and you don't have that corporate protection and that tax deduction, because the company itself is one thing. So it's a difference between business protection and then tax protection, right? And so when you're an LLC and you're filing paperwork on your personal Schedule C tax form, on average, you're paying about 36% in taxes, right?
Mhm.
As you grow and you start making money, once you hit that $100,000 mark, that's when I recommend majority of my clients switch over, and you can keep your LLC, but now we need to apply for you to be taxed as an S corp, right? Because now you're ready to pay yourself payroll. Now you're ready to do certain things that are in that S corp level, and it's also going to save you more in taxes, right? But the other thing that I wanted to piggyback off of what Joy was saying, as she helped me refigure what I was saying, was every year is different. So like she said, if this year you know you want to buy a house, we cannot be aggressive with your deductions. We need to show that full $100,000 so you can get this crib, because the whole point is we want this asset, right? If you're talking about this building and Veronica and Joy are working with you, the important part is to look at, I want this asset for my family and I. If I have to owe 20, 30,000, and again, we're going to keep it short on here because I'm going to host a workshop for y'all where I can get more detailed on this, right? But there's ways to doing things where we can structure you to help you get the property, but then also help you save on that tax bill after you've got the property. I'll just say it that way, okay?
I look forward to that. I look forward to that. Give us details on that, please.
Yeah, I'm excited. So next Wednesday, I decided to just go ahead and do a Schedule C workshop. I knew we would have some people, some questions. So I'm going to do a workshop next Wednesday at 7 p.m. And it's Schedule C. This is not a free workshop. Y'all know we do certain stuff on here for free, but this will be a paid workshop. It's $199. But what I will do is show you exactly how the Schedule C works, the deductions, the limits, because even Joy mentioned that. If you look on somebody's paperwork and it say $100,000 in advertising, I know that they're not a real tax professional. One single line item on that Schedule C, there are limits to what we can claim. So I'm going to just give y'all a freebie right here. Your limit for advertising on average is about $800. So if you have somebody putting 25,000, 100,000, 50,000 in advertising, I know right away you went to.
We've seen it. We've seen it.
I can't wait to sit down with Joy and some of your clients. I know right away that you went to somebody who doesn't know what they're doing, because every single line item on that Schedule C, the IRS has a limitation to how much you can technically claim. Now, if you have real serious receipts on certain things as an LLC that you bought and paid for, okay. But majority that we're talking about here, you know that those people didn't have it. They didn't even know they had the business, right? But this is the reason why they got audited. They didn't even know they had a business, and you didn't know you didn't have a business because the person just put a fake bogus business on you. But then they're also putting in bogus data entry, right? Because that's an automatic red flag for an IRS agent to see $50,000 in advertising. Baby, you just got audited by the person that you went to. This what I be trying to tell them. You're not dealing with a real tax professional, because a real professional would know better and wouldn't even do that. So I could tell right away looking at somebody's tax return who they went to. That wasn't somebody that knew what they was doing. So that's what I want you all to, if you take anything, I don't care about you calling me, not working with me. I don't care. What I want you to listen to and understand is, if you call yourself a business owner, you have an LLC, corporation, non-for-profit, partnership, whatever, all right? You have to work with real legitimate professionals. You cannot be okay with still side hustling. And that's another reason why a lot of you don't grow in business, because your mindset and your mentality. If I got people coming in here and they like, well, I don't want to claim that money, or I'm cutting my hours, that's not a client of mine. I tell people right away, I'm not feeling it. I'm not going to be the one for you. I will refer you to somebody else. But I don't deal with clients with a limited mindset. I don't deal with clients who lower their sales and standards to keep them in a small pot. The world is big and huge. So I'm not gonna not claim my 100,000 when I know I can go and get a $500,000 building, $200,000 business loan. I know how to flip this money 10, 20 times, and I can show you how to do it. But if you a limited person and you want to stay in making a certain amount of money, or you're not my client. I don't even want that energy around me. But have a good one. Okay.
Can I ask the question real quick? I'm sorry. So who can use the contract labor section? Because I feel like they abuse that a lot. I see that. Yeah. Who is that for?
So you can pay contract labor, but once again, so with that particular field, it's not necessarily a limit, because you could pay contract labor, but it is a limit. But I don't remember every single limit for every line item off the top of my head. I'll refer to that and review that heavily on Wednesday when we go in detail. But Joy, to answer you, that is heavily abused. And again,
Yes.
it's heavily abused because again, people are not real legitimate business owners. They're not working with real tax professionals to enter the data. And then I also know you're not working with a real professional when you only have 2 or 3 boxes filled. Because technically you
Mm,
have that whole Schedule C. There's no reason if you a real business, like your schedule should be lit. Like almost every box should be filled in if you're a real business, right? But
mhm.
you see 50,000 in advertising, 50,000 in contract, and then they may have a couple of office supplies or some business mileage. That
Yep.
I could tell right away. It's again who you're going to, who you're talking to, because a real professional should be asking you. When I'm looking at clients and they sending me paperwork, half of these people don't even have a profit and loss statement. So how are you even knowing what you're spending and what you're making when you don't even have a profit and loss statement? You don't even know what I'm asking for. Technically, you're supposed to give me that. If you're an LLC and you're a business owner, you're supposed to provide me, your tax professional, with a
Right.
profit and loss statement.
They give you numbers. You don't give them
Yeah.
numbers. So
Correct.
that's what
I,
happens.
I don't give you numbers. That's not
Right.
how this works. And that's how again you're not in real business if you're someone that's watching and you're doing this, right? But this is
Hmm.
and the people that are really in business, your problem is you're working with the wrong person.
hmm And I just want to add, tax return does not always mean tax refund.
Say it again.
Right.
You know,
Say it again, girl.
congratulations, you have made it. You have a level of success that no longer entitles you to an $8,000 refund. And
Return. Refund.
Say it
Refund.
congratulations,
again, baby.
embrace it. You've done great. Okay, so let's go ahead and excel and hire a professional, get our taxes done appropriately, and still qualify. You can run your business,
You
make
can
your
still run your
profits.
business.
You can
Yes.
make you can run your business, make your profits, go to a reputable tax person like Patrice, and then when she's done, come see Veronica, come see Joy, and invest in your next endeavors without
Yep.
sabotaging yourself because you want to get $6,000 back. Now you can't buy nothing.
Now
You
you
can't
can't
do
buy a
nothing
house.
with
Now
money.
you can't buy a home for 6,000.
Right.
And,
I
and
mean,
we see that
I
a
get
lot
it. You want
too.
the tax refund. I get it. You are used to getting back 6,000, 8,000. That's what you used to. Well, it'll be 1,500 that you're gonna get back this year, or you might
You
owe
might
on that.
owe. Yeah.
You may
Because
owe,
we're trying to buy an asset.
but
Joy
like
Yeah.
I said,
has to get you
congratulations.
approved, right?
Yeah.
Joy cannot get you approved with you claiming 20,000.
Mhm.
Yeah.
And,
Mhm.
and and that's the biggest thing, y'all. You have to understand taxes are going to be different every single year,
Mhm.
right? So the 2 years that Joy needs to show your income, we need to claim that. You
Mhm.
may
Yeah.
have to pay for a couple of months. Get on the payment plan, do what you need to do. And then, like I said, I'll tell y'all on Wednesday some things that we can do and structure you where you can, we can do some things. Okay.
And it's not
Yeah, you
excessive.
got you got to share that
Not
because I'm going to share
exorbitant.
that to a few folks that I know that need some guidance
Let
with
me
the
see if
Schedule C.
Catherine let me ask Catherine if she got the link together. Because I literally just told her before we jumped on, ladies. I was like, you know what, Catherine? I need to have a link for a class. I know people gonna want this info.
Yeah,
So
we
she
need
just said,
that. We need
I'm gonna
that.
put it in the I'm gonna put it up here on the banner.
Patrice, do you
Um,
see any questions? I know I'm not
let me
live. I'm
see.
on this.
I could see. I'm sorry, y'all. I could see. If any of
Okay.
you all have any questions right now, can you go ahead and comment for Veronica or Joy, or myself? If you have any questions, go ahead. We're going to open up the floor now. We have been on about 43 minutes, so we have about another 15 minutes. We can answer any questions or go over any other topic that you all need. Right now, we just got a couple of comments saying, "Hey." They hear, Veronica, she was messing with you. She said, I hear the noise too, Veronica.
It's
It's
you,
not
babe.
me.
Trending topics from YouTube. What's going on? Trending topics. He said, so instead of writing off all my expenses, just do depreciation. So no trending
Talk
topics.
to
That's not
Patrice.
what we're saying, right? Every client is different, right? Every situation is different, but we were going over that if you were needing to buy a home, what were some of the things that helps Joy allow. So if we did take that deduction, she can actually add depreciation back, right? That's
Yep.
what
But
we're
the
trying to say.
depreciation has to make sense too.
Right.
Don't go crazy with that, because I mean, it's a very delicate blend of things. So don't
Yeah.
go crazy if you're doing them yourself, or if you want to try to advise your tax lady on how to do your taxes. Don't, okay, because
Don't.
just have them done by somebody who understands tax laws, who understands regulations, who understands limits and boundaries that the IRS sets for their returns. Because that software is not going to stop you. The software is going to go right on through. You're going to hit send, it's going to say accepted, and then 2 years later, it come a letter from the IRS like, hey, we got some questions, and you ain't going to have no answer.
Right.
So
Yes.
see a tax professional.
And they are sending them. Believe, baby, they have been auditing
I've
left
heard.
and right.
I've heard.
You've heard,
I
yeah.
think this was the PPP, and I also think this is just my theory. I'm not a tax person, but I also think that there is an abundance of people who have decided, hey, you know what, who are not being scammers, but who are actually say, you know what, I'm going to work here, but I'm going to work on my t-shirt business. I'm going to work on my skincare line. I think a lot more people are incorporating self-employment into their actual income. So,
Yeah.
I'm seeing a whole lot more of entrepreneurs over the past few years, and I have my entire life. So I think with that abundance, the IRS is doing an abundance of checks
Oh
and balance
yeah,
tax
Yeah,
returns too.
for sure.
for sure.
Yeah, they
Yeah.
are. Yeah, they're definitely cracking down and auditing a lot of returns,
Mhm.
especially that Schedule C. But on average, just so you all know, about 10% of people are picked for an audit every year, right? But these last couple of years with the PPP, the audits have definitely been way above 10%,
I can see
right?
that. I can see that. I can
Yeah.
see. So
Yeah.
I'm super excited for what this turns out to be. I know I have so many people who are so talented with their uh, different business ideas and different business ventures that are successful. People have brick and mortar places and they are actually thriving, or people have
Yep.
online businesses and then they're actually thriving. And I'm excited to see them go to a professional and still be able to possibly get a refund, but more importantly, put their family out of Unit 1B. You know,
Right. Right.
or if they're in Unit 1B, they own the whole building. You
They
know, so
own the
it's
other
Right.
four, the other three. Yeah.
exactly they own all 4 units. You know, so I'm looking forward to at least my people for sure. Your people also too, Patrice. Enjoy. I'm looking forward to them having some better options for 2025, so we can get them into the home ownership that they've always wanted, that they have not been able to obtain with the tax returns that they have.
Yeah.
Yes. Yeah.
100%.
So here's how to reach me. If you don't see any more questions, I am Realtor Veronica Hinton with Ed Properties. I'm on all social media as Home with the HOMEWITHVEE Home with the. Um, my work number is area code 312-428-0186. Phone calls are always welcome. DMs are always welcome. You can hit me on social media, call me directly. I'm happy to assist you guys. And I look forward to having some traction based off of this conversation that we had today.
Veronica, did you say 312-428-0186?
That is my work. That's the work number. Yes.
Okay, I'm putting it in the comments so that they can get it. On Facebook, I'm gonna come back. We do have a couple of comments, but Facebook, I'm gonna come back because I can't, for some reason, I can't, with the streaming that we using, it doesn't allow me to respond to the Facebook people. So I'll go on my cell phone and respond to you all, and we'll add Joy's information too. So Joy, let's get
Okay.
your info, contact info, so I can put it on YouTube, because we're on my YouTube channel too.
Oh, okay. Yeah, I'm afraid to touch anything, so I'll let you do
Right.
it.
I'm on my laptop.
So,
I'm like, girl, what's happening on Facebook right now? Let me see.
yeah, I'm afraid I don't want to mess anything up. But you can reach me direct at 815-474-4683. That's my cell number. You could text, call. You can find me here on Facebook. I'm the only Joy Senegar there is, so you'll find me right away. And I'm on Instagram as Mortgage Mommy Shy. So Mortgage MAMICHI on Instagram. And that's why I didn't want to do it, because I can hear it, Veronica.
I'm gonna mute her. Look, I'll mute her so she.
And for that reason, that's why I didn't want to
Raise your
open
hand, Veronica, when you want to get off mute. Shaw, you okay?
Okay,
Joy
I'm
over
sorry.
here giving her info. We here. Hey, girl.
I went on to Facebook to our live, and there was some words there, but oopsie.
Joy, let me
Uh-huh.
read back your number:
Okay.
815-474-4683.
That's it. Yep.
So that's gonna be on YouTube, and then Facebook. I'll come back on and comment the same information for them on
Okay.
contact. So the
Awesome.
questions that we got, let me see if it, because somebody's asking a tax question. So Erica Kane Thomas on here, that's my girl. Erica, she said, I don't want the taxes. I want the big loan to expand. I'm trying to get a $500,000 build a $500,000 portfolio. Tell me how I can get it.
Let's
Erica,
get to $1 million.
right. I was gonna say, Erica, you ready? Because your credit is banking.
Go crazy.
You
Erica.
have funding. Erica, I'm gonna put you in tune with Joy and Veronica ASAP, because you about ready to go, Erica. Where you at? You good. I know your credit is
Let's do it.
Yeah, she's ready, because she was in my the tax lien course. We had went over tax, buying the tax liens in December, and Erica was in my course. So hey, Erica. Veronica Williams says, I need y'all information so bad. She said, I need y'all information bad. Are you able to help me learn about business credit, trying to get multi-use, and I'm saving, but I want the guidance and the direction. So Veronica, we got you. Right. We got you. We got you.
Veronica. Veronica has you.
Her name Veronica Williams, Veronica.
I know.
Catherine
wants to know how to book a consultation with you. Catherine Thomas has been a major supporter of me. Catherine, I don't know if you're still on, but I appreciate all the referrals you have sent me. Whatever myself, Joy, or Patrice can do to help advance your business and your portfolio forward, we are absolutely looking forward to doing it. Catherine, I appreciate you and thank you.
Yes, thank you. I'll respond to you, Catherine, with my link as well. And then that way we can go ahead and book a consultation or an appointment. And then the next one that I see is Cornbread, but I think she's asking about the tax advances. Can you explain the advance loan, and when you apply for one, why doesn't the loan company have any info, or when or if you will receive it? You shouldn't have paper. Also, shouldn't you have paperwork on the return and loan? Can you go to another tax company to reapply or redo it? So in a quick nutshell, kind of Cornbread, to kind of answer your question, basically an event. So that actually is a good question right now, because a lot of self-employed people are doing these loans. So actually that's a good question. I'm gonna answer that. So Cornbread pretty much just asks, can I explain the advance loan? And everything else, I'm not gonna go off into the other parts of the question. But when you all are seeing everybody right now saying, oh, you can get this cash advance loan, I can do it. Our company offers up to $9,500 as a cash advance loan. You don't see me promote it. I don't promote it. I only, if people ask me about it, then I will let them know. But I'm not a gimmicky tax professional, right? So to me, all of those, the numbers, posting screenshots, fine, right? And there's nothing wrong with offering advanced loans. But again, I'm not just a tax professional. Because I've been an entrepreneur for the last 15 years, because I've been in financial services, tax, accounting, banking, worked for BMO Harris Bank for 7 years, my knowledge and information is completely different than the average standard tax person. Let's just say that, right? Mm-hmm. So I don't think, just like, I'm not out here like, give me some money, give me the tax money, give me the tax money. It's a lot of people that's just doing taxes to make money off y'all. It's quick. $300, $500 real quick in 2-3 months, and they gone about their business. That's the difference with me, right? Because And so I'm not promoting that, but a cash advance is the IRS is not open. Let's be clear. The IRS has not even given us an actual e-file start date yet. Okay. So a lot of you all that are seeing these advertisements, a cash advance comes from whoever our bank product is with. I personally use Drake as my tax software, and I use, which is a professional tax software. Drake is not like a TurboTax or a Tax USA that anybody can get. You have to be an actual registered e-file agent with the IRS, have an EFIN number, and etc. to be able to use that type of software. Two, everyone who does have an EFIN, we partner with a bank product. So I'm able to take my fees out of your refund because I partner with a bank product. I have some clients who pay me up front, and I have some clients who I allow to use the bank product. A bank product says, hey, we will take our fee out of your refund once the IRS refunds you. So what you see right now with everybody saying, oh, we're doing this advance, we're doing that advance, that's that bank product that's offering that advance. That has nothing to do with the IRS, okay? So those individuals and those companies that are offering that, they don't have a way to really tell you how much you're going to get or when your loan is going to be approved. They do say it can take up to 24 to 48 hours for them to review and either decline or approve your loan. All right. But as far as you being able to go and to somebody else and do another one, you cannot do another one once you've already applied with that, with a loan or a lending company. A lot of them can now kind of see that because some people have done this several years.
Double dipping.
Correct. Going to banks and going to, yes. So, and that's another reason why I'm not big on doing advances, especially if you brand new. Right. If you are a client that's been with me, which a lot of my clients have been with me for years, I've watched their kids grow up, go to college, do whatever. So those people can apply, but brand new people, I don't allow to apply for a loan because we have so much fraud, unfortunately, today. But that's the best that I could probably answer that for you, Cornbread. The IRS is not open, which is why I'm not filing taxes right now. We're taking appointments, but I'm not pushing anything through because the IRS has not given us a date yet, you all. So I personally don't file taxes before the IRS actually opens. I'm not big with doing these advances. I have a couple of clients tonight that I'm going to push through strictly only for them to apply for the advance, and that's only because they have their one W-2, right? But the other thing with that, the other parts of that is you have to have all of your paperwork as well. You all should not be applying for these loans and you are missing W-2s. You have 1099s that you're waiting for. If you right, it's too early
right now.
It's too early. It is still too early. So
relax.
I think we got a question for okay, that was me typing in Eric Joy's information.
Veronica Williams says she's a pilot, so I guess she wants that fuel tax.
You know what? I ain't messing with Veronica. Veronica, you got to show me the plane and the fuel manifesto, ma'am.
She said, "Look, what I got to do? What I got to sign up at?"
You got to show me the plane. You got to meet me personally to take me to your bunker, ma'am. I need to take a video so when I file that on their taxes, the IRS could see that I did my due diligence.
I did your due diligence. Hey, she
did my due diligence. Okay, trending topics is on YouTube. He says, what to do when you have multiple businesses and your tax professional won't give you back your paperwork to file it with someone else. I think you were on my live the other day, Trending. I told you, you're going to have to call the police on those people.
You have to go down there.
Yeah, you might have to show up.
Right up to the official way to handle that. Other than you could go back down there and get it. I mean, that's me out of my lane. But
look, y'all. Look, Veronica enjoyed my neighborhood name was Peaches, right? So when he asked me this, we was on live. I remember you being on there asking me. When he asked me that last week, I was like, don't make me revert back to Peaches because Peaches will tell you go get them cousins and go pull up somebody. I said, but I'm a professional now. So I'm Patrice Stewart, and Patrice Stewart is going to tell you to call the police. But yeah, trending. Seriously, honestly, that's literally probably what I would do, because in order for you to get your paperwork back, you're gonna have to bring authorities involved at this point if they don't want to, give it to you. I don't know how else to get it, and then it's their original paperwork too. So it's not
Oh
like
no.
IRS and get copies or transcripts. This is their original paperwork that they gave to this person, and he's been saying for a while that. And I'm sorry, I'm not on YouTube trending topics, so I don't know if you're a man or a woman right now, because we're on a streaming platform. So I'm sorry, I don't want to mispronounce who I'm talking to. But I remember you asking that same question last week. Let me see. What else do we got? Cornbread says, woo, child, thanks. Thanks the stuff I see and lies the folks these tell. Yes, honey, that's what I'm trying to tell you. And a lot of these people today that are filing taxes are not in it to help you. They're in it to help themselves. Right. And
Yeah.
I honestly started my company because I was seeing so many people in our community I don't want to, let me not say that word on the internet, but get
Railroaded. You're
screwed.
gonna say
There we go.
Really?
railroaded.
You knew what I was about to say.
Yeah.
Get screwed by like H&R Block, Jackson Hewitt, those kind of
Yeah.
places. And these people, some of my clients, when they were coming to me, like a basic return for a single mom with claiming her 2 kids, they was charging them $800. And I was like, baby, that is crazy. Like, those are prices that I'm charging, like, for almost to do corporate taxes. Corporate taxes are $1,000. Ma'am, you're nowhere near a corporate tax return, right? And so for me, I was in financial services, but I ended up learning and meeting someone who was doing taxes, and that's how I got involved. And that's when I started my company in 2008. While I worked for the bank, I was still working for BMO at that time, and I set my corporation up, and I started doing taxes on the side when I left. But I started originally because I was like, I want to be the change that I want to see, right? That what we say all the time, be the change that you
Yep.
want to see. So that's how we are here at Tax Credit Academy today, because I saw something that I didn't like. And so I knew that I had the capability to do this or offer this service, but I had to grow, right? I've grown my knowledge, I've grown my expertise over the last 14, 16 years doing this. And that's what you have to kind of find. And it's very hard to me in this day and age to find real professionals like us that really
Mm-hmm.
care about the people and not just in it for the money. The money will come. But if we're working with people whose paperwork is not right, Joy's not getting loans, Veronica's not selling houses, I'm not getting clients that need to learn and grow, right? So we came together because we wanted you all to be able to understand, because we actually do have a passion for our community. And those are the
Yeah.
people you want to work with, right? Those are the people that you want in your network, in your circle, Joy, myself, Veronica, because those people that have that type of moral and integrity is going to be the ones that are going to look out for you and not
Right.
harm you,
Right.
right?
Not gonna harm you.
We
Right.
Exactly.
just talked about that, Veronica. It's crazy
People are
because it
so
sounds like
afraid to
she's
be
taking the
harmed.
words out
Yeah.
of my mouth. Like, it's so hard, like, to find, like, everybody's so clicky that they don't really care what the other person's doing. I just want to find good people that's going to help our people. That way I feel comfortable in the handoff. I know that no matter what, Patrice going to have their back, Veronica's going to do right by them. And because we all come from certain backgrounds where we've come from poverty, people have been taken advantage and things like that. We're trying to change the legacy just in one generation.
Right.
So us being the way we are with you, we might be harsh, it might be tough love, whatever you think it is, but we're really setting you up for success.
Exactly.
So,
And without
trust
the
what
dirt.
what she says, even though you might owe the IRS and somebody else might be able to get you $20,000 back. I don't know how it works, but trust that she has your best interests at heart. She's not going to do anything that could come back to her because she's putting her name on this.
Right.
So,
And that's
just keep
the
that in
difference.
mind. Yep,
Yeah,
that's
it's
the
not gonna say
difference.
self-prepared. It's gonna have
Yep,
all my company information at the bottom of your return. You're gonna have your full packet, right? You're not just gonna get a 1040, a two-page 1040. People don't
yep.
even get them all their paperwork. They filing with people and they don't even get them a copy of their paperwork. I'm like, y'all are tripping.
Crazy. Ladies, before I forget, and before we wrap it up, I wanted to touch on two things I heard said. Patrice, you mentioned that when they get to a certain income, we want to do no longer an LLC, but did you say an S corp or something like that? Is that
So,
what you
right.
said?
So in a nutshell, right? And
Uh-huh.
most people, if you are a LLC or even a single member LLC, when you file with the IRS to get your EIN, you are automatically taxed as a disregarded entity, which means you're
Mm.
taxed as a as a self-employed person. Self-employed tax are taxed on their personal tax return on their Schedule C form. Okay. But once you start making a certain amount, and I normally would say anywhere between 80 to 100,000, and that's making it. That's your profit. That's not just because if your expenses are 80,000, then you're not making money, right? You're
Right.
breaking even, which is what a lot. But if you are making 80,000 and up, let's just say 85,000 to $100,000, that's when it's time for you to come and sit down with me, and we need to review and see, are you ready to go over into the next tax savings bracket, right? Which will be, you can still remain an LLC. You don't have to change your structure, but
Mhm.
we need to change your tax, how you're taxed, your tax liability. Because now you're going to go from paying 36% on a Schedule C to now, as of right now, an S Corp, I pay 21%. So I pay less as an S Corp than the average self-employed person who files on a Schedule C tax form,
Now,
right?
Joy, I don't mean to cut you off, but Joy, have
Uh-huh.
you seen where people are the owners of S corps and they want to apply for home loans? What does that look like for you?
Yeah, so we do that. So we have and one thing I want to add, get a lender that knows how to read tax returns because that's vital. Because there's certain structures that you have, and we've had people that did the same thing Patrice said, where they started out as a Schedule C, and then the next year they transition, and those should talk to each other. So when you look at one return one year, you'll see it transition the next year, and you should be able to derive the income the same, right?
Right,
So yes, I've seen that. We've had people that do S corp. We've had people that do partnerships, which those are rare, but you see them.
right,
But the majority, when we see the S corps, we kind of pull out what's a K1, and that's where I get some of my personal income from. And then there's also buckets of income I could pull from the business return because they're kind of, I don't want to say hiding it. That sounds bad, but it's taxed on that side of it, and I can pull income from that too. So there's benefit to that. But if, like she said, you're not at that status yet, you should work to it because that K1 is taxed differently on the personal side. You're taking the lesser income and pulling it over to the personal, which I can use that as well. And then I can also look at the depreciation you filed in the corporate return and kind of come up with some small income from that too. And we just merge the two things together. So having a lender that kind of knows those complexities of how Patrice puts it together is important because another lender may say, hey, I can't do this. This is a business return. We don't do business loans.
That
But
happened to us.
yeah, that happened. And then we took it over and we were able to look at it and kind of see how the accountant worked out the income. And I have I guess, a worksheet that helps me figure out how to put the income in certain places. But we can work with any return as long as you go to someone who knows what they're doing.
right,
If
Yeah,
it's,
yeah.
if I get a corporate return and then you're writing off, salaries and nothing else, then, and I don't see it carry over to your personal return, then you just have a dud return. I can't use any income.
Yeah.
exactly.
So,
And again, that's how you know they went to somebody bogus, because
yeah,
you're not going to have a corporate 1120 tax return and not have a K1 statement. It
not have it
doesn't
carry over. Yeah.
Don't
Like I
even
was
know what a
sharing with her
K1
earlier,
is.
a girl was telling me she's an S corp, and the lady had been filing her on a Schedule C tax form for the last 3 years. I said, "Ma'am, you are an S corp. You have two different tax returns that you should
Yeah.
have, right? But again, when you're dealing with the wrong people that are uninformed and don't know, then yeah. So and then let me say that is for when you're more advanced. And I'm not
Yeah.
saying that everybody who is an LLC making 100,000, you should automatically be an S corp. Maybe it don't work for you, right? But
Mhm.
what I wanted to throw out there was, it's a difference from being registered as a business, and then it's a difference from your tax liability and how you're taxed
Mhm.
when you're doing business. And I say it all the time, it's levels to this. And
Yep.
everybody sometimes want to jump in into the big boy level, which is what happened with the PPP EIDL. Everybody wanted to jump in this big boy pot, and you're not there. You're not even in the big, you're not even rolling with the big dogs. But now you want to jump in, and you need to go sit down into the puppy area with the chihuahuas, because that's kind of where you are. And I'm sorry, this is why I'm the realest tax and business strategist. I'm a
Yeah.
educator. I wanted y'all to know that. Okay. I'm book smart and street smart. So I like to talk to our people on a
Their
level
turn. Yeah.
that they
Yep.
can understand. We get real with each other when we go to grandma's house and auntie house, right? I'm
Yep.
not I'm not Patrice Stewart, right? So I'm gonna bring it to you like this big cuz talking to you right now.
Like pieces.
Okay. Look, no, Veronica, we ain't bringing Peaches back. We ain't bringing her back. Peaches was a different level, right? But I'm big cuz, and we want you to be properly informed, right?
Yep.
And I want everyone to know this. Every single one of you watching, your tax return is different. Your income is different. Your lifestyle is different. There is no one size fit all when it comes to taxes. So
Yep.
stop letting these people put this out here. Oh, you gonna get this. Oh, you gonna get that. You getting 20, you getting 30. Every single one of you has different income, different W-2s, different 1099s. There is not one tax return on this planet that I have filed that had the exact same numbers. Okay.
Right.
And it doesn't. You're gonna be off $1.05. Somebody may get 3,800, somebody may get 3,803. Okay, it's never the same. So I need you all to put that in your head too. There is no one size fit all to taxes or business. We're gonna work with you to figure out what's the best option for you and your family. What is your goals? What do you want to do? And then we're gonna put that plan together and help you do that, right? Because the
Hmm.
whole point is we want you all to have an asset.
Yep.
Joy Linden, Veronica's gonna help you find the house. The whole point is for us to be owners, not renting everything. You need to be able to give your family some buildings, some land. Even if you want to buy some land, buy something that you can own.
Yep.
Okay.
Patrice, how can my followers reach you? Your followers, they know how to reach you, but how can my followers reach you?
Same. Let me know. I have my phone number here going across the screen. That's my office number, but I'm gonna
Okay.
type in there. But my company name is Tax Credit Academy. My office is in Chicago, but I work with clients in all 50 states. I'm an e-file agent, a registered authorized e-file agent with the IRS. So we can electronically file your last 3 tax years. Okay.
Oh.
Yes, I'm not
Very
doing
Okay.
nice.
your
Yeah.
last 3. Okay. So if you got clients that need to file 3 years worth of taxes, we can push that through electronically. We're not mailing them in. All right. They can go through electronically. The IRS will get them instantly. It's no waiting like when y'all on TurboTax, you got to wait 4-5 hours to see if you got a return. No, when you file with a real office, I get acceptance probably in less than a minute before you even put your coat on
Mm.
at the door. Your taxes have been filed,
Yeah,
right?
Joy. When you have the proper credentials, you can e-file prior years.
Yeah.
Oh, I didn't know that.
Can't.
Yes.
They
Yeah.
can't do that.
Again, thank you for saying that, Veronica. When you
Yeah.
have proper credentials, right?
No, no mailaways.
Right, right. And your paperwork will never say self-employed, because I am saying I take liability. Okay. That's the
Mhm.
difference with a professional. I'm saying I'm taking liability for preparing this return and putting my name on it. And so the IRS knows that you came to me in my office. If you all are going to somebody and they just put in whatever, it's going to say self-prepared. And those
Mhm.
people's names
Okay.
are not attached. And all of the liability is on you, which is why you end up owing and having to come back to me a couple of years later saying, hey, what can we do? Because there's no way to get out of it and say you didn't do it, because it shows that you did it. Okay.
Yep. So you did it. Yep.
Yep.
Yep. So Joy,
Um,
how can Patrice's followers find you, Joy? My followers know how
Um,
to find you.
yeah,
I put both of
they
y'all's
can find
info
me on
in this
Facebook.
too. Yeah.
Yeah, if you look up my name,
I
they
think
can
on
find me.
the Mortgage Mommy Shy. Yeah. Okay. Sorry.
For Instagram, but if you look me up, my Facebook page, business page is up here too. So
Okay. All right. ladies,
Oh,
I had a really
I'm
productive
educated.
conversation. Yeah, we had a really productive conversation.
This was good, y'all. We
Yep.
got to do this
To
Yeah.
sum
again.
all this up, to sum it up, if you are self-employed and you want to buy property this year, uh, do not do what you've been doing to your taxes. There are better ways to do things that will definitely ensure that you are able to purchase this year. Patrice Stewart can definitely walk you through those ways and have a consultation with you and get you done. After you get your consultation and your taxes done, filed flawlessly, you reach out to Joy. Joy will then
Joy
generate a
gonna handle
pre-approval
it.
and say you qualify for
Yeah.
this much based on these taxes. And then
Yep.
once you get that in your hand, you give it to me, and we start house hunting. So we're on step one, Patrice. Step two, Joy. Step three, Veronica.
Then
Right.
With the
step
team being
4, Patrice, after you get the property, so you know how to file for next year. And then you do it
yes,
again with
that's
us,
step
with me,
four.
and then
Again,
repeat.
yes,
Repeat. Yes, we are rinsing and repeating, y'all. I
Yeah.
got to get y'all a shirt. I just have some shirts made. Don't sell grandma house. So I'm gonna get both.
Oh, I want one. Okay.
Yeah, because y'all know while I share with Veronica that I'm big on that. Because I bought my family house back in 2018, and I've been ever since then. And I bought another house on the same block. And so I was like, we need to buy our blocks back. So I've been on
Yes.
a big mission with that. That's how I met you, Joy, through Dearborn Realtors Board. So
Yes. Yes, ma'am. That's
so
right.
yes, we want you all to be homeowners, building owners, property owners. Okay,
yes,
multi-unit. That's my next thing. Multi-unit, multi-family. So
yes.
this was great.
Awesome.
Thank you so much, ladies.
This was
Thank
great. I
you.
look forward to hearing from everybody who spoke up on the live today and had questions on the YouTube. I look forward to hearing from you guys. DM us. It was a pleasure. Thank you for allowing us on your phone and in your home tonight. Thanks,
And get a
everyone.
battery. Get a battery for that smoke
It's
detector,
not
Veronica.
me.
Veronica,
I'm gonna send you a battery.
she gonna send you a battery.
It's
Cornbread,
not
I'm
me.
gonna come
I'm
back and
good.
answer your question. I'll come on Facebook and answer your question now once we get off live. I'll just respond to you directly on that one because she had another tax question. So, all right, ladies, I appreciate
Oh,
you all.
Yes.
bye.
Good night,
Bye.
Have a
Have a
good
everyone.
good night,
one.
everybody.
You
All right.
too. Bye bye.